Hello and welcome to another Ask a Foolish Question video here at the Motley Fool. With me today is Chris. Hi Chris.
Hey Sam.
And we're here to answer one of our readers' questions. Now John from Stoke has written in and he is wondering what the difference is between investing and trading. Chris, could you shed any light?
Yeah, well, I guess I'll first of all start off with, I don't know about you Sam, but whenever I speak to someone and I tell them that I'm an investor and I look to invest for the long term, I often get the kind of the disapproving look of, oh my God, isn't that a little bit risky?
Yeah, I get that.
Yeah, you see. And I guess people, there's still a certain stigma attached to investing that it's maybe a more risky way of looking after your money. But what I tend to think about that is that people that think that, they often think of more of a trading side of things rather than straightforward investing. And if I was going to sort of break them down into an easy way, I guess investing, the best way to sort of describe that is that investing is all about building wealth over a longer period of time. Be that if it's through, I don't know, a particular portfolio of stocks you may have, or bonds in particular, or even sort of mutual funds, that sort of side of things. Anything that's basically there for the long term is what I classify investing as, whereas trading is something that's a little bit more short term. So if you buy frequently or look to trade more stocks than you certainly would if you were investing over a long time, that's what I classify as a trader.
Sure. So that's the definition, but in terms of returns, what would you say the difference is between investing and trading there?
Well, they could be very similar. It's all about the particular style you've actually adopted at the time. If you're an investor, you might be really, really happy with returns of maybe sort of 10 to 15% a year. I know I certainly would. But if you're a trader, you might be actually looking at something a little bit more than that, maybe sort of 10% a month perhaps. Or again, completely depends on your style and obviously how much you'd actually have to invest. But obviously the crux of that is trading. You're obviously going to be speculating probably a lot more money than you would if you're investing for the long term. So it tends to be a little riskier, I guess.
Yeah, a lot more risks.
Yeah.
Because here at the Motley Fool, we take a long-term approach to investing.
Absolutely.
And we're definitely happy to see those dividends rolling.
Absolutely. And that's obviously what you don't get with if you're a trader and you're trading stocks quickly. You don't get those wonderful, wonderful checks coming in once or twice a year, which we all love here. So yeah, that's what you kind of miss out on.
Fantastic. All right, well, thank you very much, Chris.
No problem, Sam.
And I hope, John, that answers your question. If anyone else has any questions they'd like, then email in to foolishquestions@fool.co.uk. Fool on.
Thank you.